Hello everyone, I am Dr. S. Linus, Assistant Professor, Department of BBA, CA, St.Joseph College of Arts and Science, Autonomous, Cuddalore. In this video, we are going to see about final accounts. So particularly in this video, we will be seeing introduction of final accounts, components of final account, trading account, profit and loss account, balance sheet, one practical question with the working note. So first, what is meant by final accounts? Final accounts are various accounts and statements that provides information related to progress of a company. Final accounts includes various accounts like trading account, profit and loss account, balance sheet. So combination of these accounts are final accounts, and also various statements like cash flow statement, fund flow statements, and etc. So this combination of these accounts and statements are final accounts. It is prepared at the end of the accounting period. Final accounts are normally prepared at the end of the accounting periods. So final accounts are prepared with the help of trial balance. So with the trial balance, we prepare final accounts. So final accounts includes balance sheet, profit and loss account, trading account of a company during the particular financial year. Next, components of final accounts. There are three components in final accounts, that is trading account, profit and loss account, and balance sheet. First, trading account. Trading account is the first account that is prepared in the preparation of final accounts. So trading account is the first account that is prepared while preparing the final accounts. In trading account, records the expenses that is related to manufacturing, factory, and production expenses are recorded in the trading account, or in other words, direct expenses are recorded in the trading account at the debit side. So in the debit side of the trading account, all the direct expenses are recorded. For example, in the debit side, we are just entering opening stock, wages, direct expenses. So we say this side as a LHS, right, left hand, LHS, left hand side. So in that side, we are entering the opening stock, wages, direct expenses. On the right hand side, RHS, we just enter total sales, closing stock. So by preparing trading account, we will come to know the gross profit that is incurred during the particular year, financial year of the particular company, either gross profit or gross loss that is incurred during a particular year of a particular company. So next, we are seeing the format of trading account. See, this is the format of a trading account. In the debit side, these are the items will be entered in the debit side of the trading account. First, we are seeing the opening stock. Below to that, we have purchases. If there is any purchase written, that will be deducted from the purchases. Below to that, we have to enter wages. After that, customs and import duty has to be entered in this side. Next, carriage expenses has to be entered here. Then royalty, if there is any royalty paid, that should be entered here. Manufacturing expenses that is incurred are to be entered here. Then finally, packing expenses are to be entered here. So these are the direct expenses regarding the production or manufacturing company. So these expenses, direct expenses, has to be entered in the debit side of the trading account. In the same way, right hand side or in the credit side, sales should be entered there. If there is any sales return, that has to be deducted from the sales, and the final amount has to be entered in the outer column of the amount. Then below to that, closing stock has to be entered here. So the different, finally we have to total these both the sides, and the next step is totaling the both the sides. If debit side is higher, debit side total is higher, that amount should be brought to the credit side, stating that gross profit. So if credit side is higher, that amount has to be carried out to the debit side, stating that gross loss. So next we will move on to the profit and loss account. Profit and loss account shows all income and indirect expenses relating to business. So profit and loss account shows all the indirect expenses and incomes of the company during the accounting year. See, on the debit side of the profit and loss account, we will be entering all the expenses such as administrative expenses, selling expenses, distribution expenses occurred during an accounting year. On credit side, all incomes received during an accounting year has to be entered. So this is the format of profit and loss account. In the debit side, we have to enter salaries, rent, commission, advertisement, bad debts, discount, net. Finally, a discount paid has to be entered. So these are all the expenses. So these are all the indirect expenses of the company. So that has to be entered in the debit side of the profit and loss account. In the same way, in the at the credit side of the profit and loss account, interest received, commission received, discount received. So these are the incomes. So all the incomes should be entered in the credit side, and all the indirect expenses are to be entered in the debit side of the profit and loss account. So the balance amount will be net profit. So next we will move on to the third account, that is balance sheet. It is final statement that states the final financial position of the company. So balance sheet is known as the final statement that shows the final financial position of the company. It enlists the assets and liabilities. So balance sheet states the assets and liabilities. So this is the format of balance sheet as we are seeing in the slide. So in the balance sheet, on the left hand side we record liabilities, on the right hand side we record assets of the company. So under liabilities, the first item will be capital. If there is any drawings, then drawing should be deducted from the capital. And if there is any net profit, then net profit has to be added to the capital, and the final amount has to be entered in the outer column of the balance sheet. Then below to that, reserves and surplus has to be entered in the liability side. Then below to that, bank overdraft, creditors, bank loan, bills payable, outstanding expenses. So these are the liabilities of the company. So that has to be entered here. Liabilities means the company is liable to pay this amount, or these things the company is liable towards. So these are the liabilities. So on the right hand side we are entering assets. Assets includes land and building, fixtures and furniture, plant and machinery, debtors, bills receivable, cash and bank, cash in hand, prepaid expenses, closing stock. So these are the assets of the company. So that has to be entered in the right hand side of the balance sheet. So in balance sheet, both liabilities as well as asset has to be balanced. Or if liabilities and assets are not balanced, then we need to check the trading account and profit and loss account for if there is any error and mistakes happened. So